Hi there. 5 years ago, I posted on my blog, savri.com, a detailed analysis of property tax assessments and their impact on sustainability. It's titled, Love Thy Affluent Neighbors. It was my effort to provide some ideas about how to sustain and perhaps lower our property tax rate. Recently, there have been several new discussions about how to help citizens continue to afford to live here. Some of the plans have the potential to help achieve that goal, and others, although they mean well, have the potential to disrupt the foundation of our tax system, causing significant turmoil. For those who have read my report, they'll find the information in this video a refresher, and also get an update on the numbers I used back in 2019. For others, the goal of this video is to provide a quicker understanding of the property tax formula and how changing it can impact our sustainability. So let's get to it. Jamestown property taxpayers benefit from one of the lowest rates in the state. It happens because of a sound budget with great fiscal management and a very large TTPV, which is the total taxable property value of the entire island. It's important to understand that not all island properties are taxed. As we are aware, there are many acres preserved and others exempt in some way. Of course, town-owned property is not taxed. If we zoom into the center of town, we see that the concentration of taxable properties increased dramatically. Each property has a tax identification number in the tax assessor's office, and that number is linked to who gets the bill and how much they will contribute to the town for the property tax portion of paying for the budget each year. Most property owners understand that their bill is calculated by taking the assessor's value of the property and multiplying that by the tax rate for that year. The current rate is used for the 2023 bills is $6.98 for every $1,000 of assessed value. For example, a property assessed at $500,000 is billed $6.98 times 500, totaling $3,490 of tax obligation for the year. The assessor's value is done using professional assessment guidelines. The state requires that professional assessments of the entire island be done every 3 years. Years 3 and 6 use what is called a technical assessment, meaning the company the town hires will use recent property sales and other data to calculate current values. Assessment year 9 is called a full assessment, where in addition to the data, an actual property visit is done. The island's TTPV is calculated by adding up all the assessed taxable property values. For the 2023 tax year, that amount came to $3,257,522,000. Those watching who have read the 2019 report should be impressed because this number indicates a $1 billion increase since then. And with the technical assessment being done this year, we can expect to be even more impressed. Okay, now we have the first part of the formula. The next part is the town budget requirements from the taxable property owners. First, it's important to understand that the TTPV amount has nothing to do with establishing how much the town budget will be. The annual budget is determined by the town administrator and school department calculating their needs, then getting approval by the town council that has public hearings, and then presenting all that to the people for approval at the financial town meeting. Once we, the people, have approved the budget amount needed for the coming year, the next thing is to apply, subtract, revenues that do not come from property taxpayers. They are from things like services the town gets paid for, leases, and several other revenue sources, as seen here. The total approved spending for the 2023 budget was $28,285,275, but the other revenue totals were estimated at $5,324,602. When we subtract that from the total, we end up with $22,737,509 to be paid for by property tax revenues. So now we have the second part of the tax rate formula. To do the final calculation in the formula, we take the TTPV and compute the rate per thousands of assessment. It's done by simply dividing it by 1,000. Then the $3,257,522,000 becomes $3,257,522. Finally, we divide that result into the $22,737,509 budget required to be paid by property owners. And then we get the tax rate of $6.98 per thousand. That's how the formula works. Now that we know how the TTPV impacts the tax rate, the second part of this analysis covers the potential impacts that changes have on all property owners' tax bills. To do that, we'll start with a couple of what-if scenarios. In the first example, we'll consider the potential TTPV impact from the technical assessment being done for this year. Yes, massive increases are anticipated by most because of the huge real estate sales prices we've seen. As an exercise to better understand how the TTPV impacts our lives and our bills, let's look at what would happen if there is a doubling of the island-wide assessments. We would double our current TTP value, making it $6,515,044,000. Dividing that by $1,000, as we did before, we would be using $6,515,000 against the $22 million budget and end up with a tax rate of just $3.49, a 50% reduction. Wow. But before we go out and splurge with all that tax savings, the truth is our tax bills will not change one bit. Yes, the tax rate is a lot lower, but our property assessments will be higher. So the number of thousands we multiply by, the 349, will double, providing no change in our tax bill. Here's what it looks like. A $500,000 assessed home under the current rate of $6.98 is getting a bill for $3,490. So if the house value doubles, with the new assessment making it $1 million, with the new lower rate of $3.49, the bill would calculate out to be the same. However, the personal wealth would be doubled, making them $500,000 wealthier. Here is an opposite example. Let's say for some reason the island-wide TTPV was cut in half. Maybe the economy crashes, or God forbid a bridge is destroyed. Here's what would happen. The TTPV for the budget formula would obviously be lower, and we would be ultimately using just $1,628,761 as a divider into the budget required before. Yes, that would result in a doubling of the tax rate, making it $13.96 per $1,000 of assessed value. So now, our $500,000 house would get a bill of $6,980, doubled. If you haven't figured it out already, since the island-wide assessment for the TTPV was cut in half, our $500,000 house would now be worth or assessed at just $250,000, making the tax bill half as much and bringing it back to the original $3,490. So, an island-wide reduction in property values that changes the TTPV amount will not change our bill either. But, unfortunately, personal net worth would take a serious hit. Okay, after those two what-if examples, we're ready to look at a more realistic happening, a drop in assessments to just a portion of the island. A few examples of how that might happen would be a section of the island loses significant value because something happens to the water supply, or the loss of a roadway cutting off part of the island homes who now need to use boats to get to the mainland. Or a new classification of property owners is created, giving a 20% reduction in their property tax assessments. Now, let's say any one of those examples causes a 25% reduction in the TTPV. Then, the budget number would be divided by $2,443,000, resulting in a tax rate of $9.30 instead of the current $6.98. The scenarios are not like the earlier examples because it's not an island-wide impact. So those properties not affected will have to pay more to make up the difference. People in the water-impacted area will pay less because their property's assessment values have decreased. So everyone else needs to make up the difference with their tax bills. The loss of access to Beavertail by car would reduce those property assessments, and the rest of the island would have to make up the difference. Those with special classification get a reduced assessment, are not paying what they would have, and everyone else would pick up the tab. These examples used are most likely not to happen overnight, and hopefully not at all, with the exception of the last, special assessment properties, which is actually on our doorstep, is being called a homestead exemption. The current proposal wants to give every taxable property that has a house owned and occupied as a year-round residency a 20% tax bill discount for their portion of the TTPV. Wow, if you're not a snowbird, things are looking good so far. Let's see the impact. The estimates are being used by the ad hoc work group pushing the idea say that at least 50% of taxable property owners would qualify for the 20% discount, or about 1,350 households. Now, because the committee doesn't know precisely which properties, or the total of what they are valued at, or how many there actually will be, we're left with using their guesstimates. So let's see what a potential impact using their numbers will have on our tax rate. Taking their estimate of 50% of the island households, we'll use the current TTPV of $3,257,000,000 and then calculate 20% off, one half of that, making a new TTPV of $2,931,770,000. With the current budget, that would make the tax rate go up to $7.75 for everyone. For those who do not qualify for the homestead discount, they would be paying higher property taxes to make up for the discounted assessment from the homestead gift. Now, we'd all like a discount on everything, and 20% off our tax bill would be cool, but does it really save homesteaders 20%? And B, what will be the cost and consequences of managing the program, including checking up on those who claim the homestead exemption? For those homesteaders who have that $500,000 property we used in previous examples, they will calculate their current bill of $3,490 and take 20% off, expecting to pay $2,792. But when they get their bill, it will be $3,100, or $300 less of a gift than they planned on. Yes, even though their taxable property value has been reduced to just $400,000, the new tax rate increase, because of the cost for their gift, applies to everyone, even them. As history has shown with similar programs, in the long run, those paying extra taxes by not qualifying as homesteaders will find a way to get around the discrimination and a way to qualify, and chances are the town will be left with a complicated tax management system in paying for costs to investigate those making homestead discount claims. At first glance, the home-style gift sounds like a good thing. It's being sold as taking from those who have more and giving to those who don't have as much. But, in my opinion, those who have more are not the enemy, and they should not be penalized for their prosperity. We all have more to benefit by welcoming those with affluence, just as I described in my original analysis 5 years ago. Yes, there are better ways to help those with less. Okay, that's it for this report. Hopefully the information in this video helps you understand the impact the TTPV has on our Iowans' finances, and that it's very important to be aware of the effects of changes to it in order to help us make better decisions about the risks and benefits of new programs. My original full report, titled Love Thy Affluent Neighbors, also includes ideas about how we can promote more TTPV increases and reduce taxes for everyone. Again, it can be found at my blog, www.savri.com. Feel free to share this video with others who would like to become more knowledgeable about the property tax formula and how future changes will impact their bills. Thank you for listening.